Welcome back to Synaptic Dividends. We break down a new dividend stock often to help you build your passive income portfolio. If that's your goal, make sure you're subscribed so you don't miss out. Now, today we're opening the case file on an absolute legend, Colgate-Palmolive. It's considered royalty for income investors, but is its reign still secure? Let's dig into the numbers.
Look, a company like this has a reputation that's basically unshakable in the dividend world, but you and I both know that a great history doesn't automatically guarantee a secure future. So the big question we're really investigating today is simple. Is Colgate's famous dividend still a rock-solid source of income, or are we starting to see some cracks in that legendary status? To find the answer, we've got to follow the evidence.
And our investigation kicks off with what I think is the most important clue for any dividend detective, the cash flow payout ratio. This is where we cut through all the noise and get to the hard financial truth.
Now, the key here is that we are looking at real, hard cash. This isn't some fuzzy accounting number that can be played with. Nope, this is the actual cash the company has left after paying all its bills and running the business. This ratio tells us exactly how much of that leftover cash is being sent back to us, the shareholders. And the rule is simple. The lower this percentage, the bigger the safety cushion.
So what does the evidence tell us for Colgate? Well, the number is 51.4%. And right away, this is a major clue in our case.
Let's just put that into perspective. What this means is that for every dollar Colgate pays out in dividends, it keeps almost another full dollar for itself. That is a massive safety net. It tells us the dividend isn't just covered, it's covered with room to spare. This is a huge, huge sign of safety right out of the gate.
Okay, so the current financials look really solid. But what about over the long haul? Let's move on to our next piece of evidence, the backstory. You can think of this as the company's character witness statement, built up over decades.
62. I mean, just let that number sink in for a second. Think about everything that's happened in the world over the last 62 years. All the recessions, the booms, the busts, the crises.
That's right, 62 consecutive years of giving its shareholders a pay raise. Every single year. This doesn't just make them good, it puts them in this ultra-elite club called the Dividend Kings. A track record like this shows you that paying and raising that dividend isn't just a financial policy, it is deep in the company's DNA.
And what's really interesting is the way they've grown it. Look how consistent these numbers are, all hanging around that low single-digit range. This isn't an accident. It shows a very deliberate, almost conservative strategy. They are not chasing flashy, unsustainable dividend hikes. They're all about slow, steady, and reliable increases you can count on. It's the definition of predictable. A long history is great, but how does that history hold up when things get really tough? For our final piece of evidence, we're going to put this dividend through the ultimate stress test. How did it perform during the worst economic crises of our lifetime? And this right here, this is the smoking gun. Think about it. During the 2008 financial meltdown, when countless companies were slashing or completely eliminating their dividends, what did Colgate do? They gave shareholders double-digit raises. Then, fast forward to the pandemic, a totally different kind of crisis, and what happened? They just kept going. The increases continued without skipping a beat. This proves they don't just survive crises, they actually thrive through them.
So how is that even possible?
Well, it's because the safety of this dividend isn't just some decision made in a boardroom. It's literally built to the fabric of the business itself. When times get tough, you might put off buying a new car or fancy TV, but you don't stop brushing your teeth, right? People are always going to need to buy toothpaste and soap. These are non-negotiable items, and that creates this incredible fortress of cash flow that protects the dividend from just about any economic storm. All right, we've looked at the financial clues, we've reviewed the decades of testimony, and we've put it through the ultimate stress test. I think it's time to deliver the final verdict. So let's recap the evidence. It's crystal clear. First, we have a super safe payout ratio with a huge cash cushion. Second, we have an ironclad 62-year history of raising the dividend. And third, we have undeniable proof that this dividend can weather the absolute worst the global economy can throw at it. The verdict is in, and honestly, it's not even a close call. Our investigation shows that Colgate-Palmolive's dividend is still the real deal. Based on all the evidence we've looked at today, it remains exactly what its reputation says it is, a rock-solid pillar for any income-focused portfolio. Case closed.
Now, if you want to go deeper and really understand the full business model behind these incredible numbers, check out our long-form analyses over on our main channel, Synaptic Investing. And of course, if you found this breakdown helpful, a like is always appreciated. And be sure to subscribe for more dividend analyses just like this one. Thanks for watching.